Welcome to HSBC Build and Grow, a series that focuses on managing finance for business continuity. As financials takes center stage in business continuity conversations, your story together with HSBC is proud to present this series, featuring some of the finest minds in the ecosystem to help businesses leverage the financial ingenuity, perspective, and insights from these experts to power their own journey, their own continuity. Dhruv, very nice to have you on the show. Dhruv, you are best positioned to tell us what's happening in the real estate space. I want to understand that, and also about PropTiger. You've been in a very crowded market, internet startup, growing small, and now so big. Tell us about your journey and tell us about the real estate market right now.
Yes, look, talking about real estate first, Shraddha. I mean, if one looks at real estate from a long-term perspective, I think the fundamentals are extremely strong.
Hmm.
Just given the young demographic of the country, the urbanization rate, growing income, I think all of that bodes very well for a sector like real estate. I think the sector has faced challenges, in the last 6 to 7 years. I think for a few reasons. One was the general mistrust in the sector. I think developers over leveraged themselves, were unable to meet their commitments in terms of project completion, etc., which led to a fundamental mistrust. And as things were sort of getting better, then there was the whole RERA regime. Prior to that was, of course, demonetization, which hit the sector hard. But the whole RERA regime, which is good for the consumer and the developer going forward, but just adjusting to that took its toll. Then adjusting to the new GST regime, and then there was this whole NBFC liquidity crisis, which again led to a supply shock.
Yeah.
Now COVID. So I think real estate really has been hit by a lot of different things over the last 6 7 years, uh, which is the reason why it's not done so well as a sector. But as I said, fundamentally, I think the right macro tailwinds are there. I think in the short term, frankly, it's going to be at least 6 to 12 months before we see demand coming back.
Yeah.
uh, there will be delays in project completion construction because uh, as we know there's a lot of reverse migration which has happened back to the villages. We're also
Hmm.
now on the cusp of the monsoon, so given all of that we're going to see construction delays, and we don't expect to see anything start until after the monsoons are over. I think commercial real estate will see a fundamental shift. It's been one bright spot in the entire real estate market in the last 3 4 years, but that I think will see a fundamental shift with the entire trend towards working from home. Uh, you know, Flexible spaces like co-working, although might benefit from that. I think the way people relate to a home will change. I think what people have realized during this 70-day lockdown is that the only safe haven for you really is your own home. So
Yeah.
people are going to fundamentally look at a home very differently. People will want larger spaces because being locked down with no balconies, with no study where you can work from home, all those things will change. So people will want bigger places. Plus, I think real estate markets in the periphery of cities as well as smaller cities will do well, because if there is indeed a definitive shift towards work from home, which I fundamentally believe will be, you're going to see that many people don't need to live in the heart of the city where they are working in order to effectively do their jobs. So somebody in a smaller town may continue living there and still work for a company based out of Delhi. And similarly, you could be living at the periphery of the center of Delhi or Gurgaon or Noida, and yet be able to do your task effectively. So I think these are certain fundamental shifts you're going to see. But in the short term, as we are seeing with every other category, I think there will be a demand challenge for the next 6 to 12 months.
Yeah, but Dhruv, I also want to understand that real estate as a sector, right? Like India, I still think is extremely underleveraged. Tell us about that, right? What is the big opportunity that you see for the whole sector?
So look, as we all know, Shraddha, that real estate typically tends to be anywhere between 6 to 10% of GDP for any economy.
Hmm. Yeah.
It's really a key piece of any economy. It is in India the second largest employer of people. It's a key sector.
Hmm.
I think where we've had challenges, I think, is to do with I think a certain set of developers who did not approach the sector in the right way, uh,
Yes.
and hence led to a lot of mistrust in the sector. But I think with RERA coming in, and laws becoming more stringent, and you see, you can't have a sector like real estate not regulated. It is just unbelievable that the first set of regulations really came in about 2 years ago. So that, I think, was probably the reason why real estate has punched below its weight. But now with regulations coming in, and also fundamentally with the whole liquidity crisis and now COVID, I think will lead to a shakeout in the industry. The weak players, I think, will have to merge with stronger players or will simply fold away. You will see the rise of many organized players in real estate. There are many who've been there, like DLF, Prestige, many others who've been around for a long time. But there'll also be corporate players like, whether you have Godrej, Tata, Mahindras, many others who'll also step into the sector. So once you have a sector which has quality players and is regulated, I think you're going to finally start seeing the realization of the potential which real estate has, in India, and frankly, which needs to be a key driver of economic growth for our country going forward.
Yeah. Yeah. Tell me
Tell me
about
about
PropTiger.
PropTiger. It's been a fascinating journey for me personally, Shraddha. We started the business in 2011,
Hmm.
and when we started, we picked a very specific niche to start in.
Hmm.
So despite the fact that it was even crowded at that point in time, as you started out by saying, we picked a very different niche. We basically went after the new homes market, and we said that we are going to actually provide end-to-end services to the consumer, which
Hmm.
means we're not going to be involved only in search and discovery, but we're actually going to handhold the consumer through the entire transaction
Hmm.
and help the consumer with financing as well.
Hmm.
That was the differentiated positioning that we took, and that
Hmm.
helped us to grow because we
Hmm.
were sort of immune to the noisiness in the sector, where there were many, many players out there who
Hmm.
who were following a traditional classifieds model.
Hmm.
Um, then along the way, of course, we did do several acquisitions. So we've grown both organically and inorganically, and created now what I would like to call like a full stack real estate player,
Hmm.
which essentially works with every participant in the ecosystem, all the way from developers, brokers, consumers, financiers, and we sort of as the digital portal, being at the center of it all, trying to create this ecosystem which is frankly missing in real estate.
Yeah. Yeah. You know, Dhruv, and you have to tell us that I I still feel that the real estate space per se, or the ecosystem around it, still is very fragmented, right, in the country.
Yeah, so look, if you look at the fragmentation, yes, there are approximately, you know if you look at CREDI, which is the Association of Real Estate Developers, I think I might have my numbers a little off, but anywhere from 12 to 15,000 developers out there. So clearly there are a
Hmm.
large number of developers. If you look at broking, I wouldn't say it's really fragmented. If you look at the United States today, I think you have 2 or 3 million brokers out there. So in
Hmm.
that sense, India has far fewer brokers, given the size and scope of the country. I don't think that's very fragmented. It's just the nature of the beast, the way it
Hmm.
works. I think where we're going to see consolidation clearly is that we will see fewer developers. Uh, Brokers, what we'll find is, while the numbers might still be big and might only grow, they'll be allied with a few platforms. So, for
Hmm.
example, in the US, you have brokers who are allied with, say, a Century 21 or a Coldwell Banker or a Compass, and many of these. Similarly, I think in India, what you'll start finding is that many of these brokers will start allying themselves to certain platforms. So you'll have like a
Hmm.
few large platforms who will have these brokers, allied to them. So in that
Hmm.
sense, that fragmentation, which you see right now with small mom and pops operating independently, you'll find that they all ally themselves to a few large platforms, and in that sense you will see consolidation of the space happening. But having said that, my personal belief is that as far as proptech is concerned, I think India is hugely underinvested. If you look at the United States, there's a new proptech startup funded every week, and
Hmm.
maybe more. While in India, you can count the number of proptech startups on your fingertips. I think that's probably been as a result of the underlying sector not having done very well in the last 6 to 7 years, and which is why investors sort of not being able to build conviction on the sector, let alone the idea which you have or the team or the technology. But I think now with this sort of event which has happened, I think it is a one in a lifetime, or once in a lifetime, or once in 100-year event, which I think will fundamentally change the nature of the industry, and I think will open it up to a lot more technologies, not just in the marketing of real estate, which we popularly believe as the domain for proptech. I think it'll be across the board, all the way from design and planning, construction technologies, construction monitoring, then the sales and marketing piece, where we are involved, property management, portfolio management, around financing of properties, around even sort of access to property, right? I mean, not everybody can afford to pay 20, 30 lakhs for a piece of property, right? But there are different ways where you can tokenize property and give access to people who can only afford smaller ticket sizes. So you will see a lot of innovation across the entire real estate value chain as far as PropTech is concerned.
I have to ask you this. Real estate also is a little scary space, no? Just the thought of real estate, because you feel that even in our movies in Bollywood, we've grown up watching that real estate guys are the gundas, and there is a bad overall name to the sector, right? What do you have to say about it? Is it like just a perception, or there is some truth to it?
There's always an issue of perception,
Mm.
which is always there. And, whatever you see on celluloid always has some truth to it, but then obviously gets sensationalized because at the end of the day, you want an audience to come and get entertained. So if you kind of just talk about mundane things at a mundane level, people won't come and see you, right? So look, I think if you look at the film industry, just think about it, 20 years ago, people used to also associate the financing of films, they just see it as shady, right? That's completely been transformed and become completely corporatized, right?
Yeah, yeah.
It's the same notion with real estate. I think previously financing was again, coming from shady sources, but now again it's become a lot more professional. So I think some of those things which you saw in Bollywood 10, 15 years ago, I don't think are reality. I think what's real though, which we've all seen and experienced ourselves firsthand in the last 6 or 7 years, is that developers have over leveraged themselves. They
Hmm.
launched a project, raised capital from customers, against that. And then rather than completing that, they've used that money to go and buy more new land, and not with an
Hmm.
intent, bad intent to divert or anything. It's just trying to over leverage yourself, hoping for the best, right? And once you hit a wall, and let's say the demand which you perceive is not infinite at the end of the
Yeah.
day, and price increases are not infinite at the end of the day, that's the time when it's sort of bites you in the back. I think that deleveraging will take place, as people who've got a lot of land are not able to construct will sell that land to new players coming in. Weaker players, as I said, with tough balance sheets, will start merging with stronger players. So you're going to see the evolution of the industry as well. And now with regulations coming in, it also was the big bad world out there with no regulations. I think the industry is going to see a massive transformation happening going forward. So
Yeah.
I think we needn't worry about the reputation of real estate, what it was 20 years ago. I think it's changed dramatically now.
Dhruv, you've been credited with, the big famous housing.com. You helped revive housing.com. Take us through that journey, because for all of us, there was this whole investment that happened 3, 4, 5 years back in some of these interesting startups, but we didn't see that kind of scale in many of them. But you have revived and housing.com. So tell us about that. Would love to
Yeah.
know what's
So
up.
look, housing.com is a very interesting story, Shraddha. Clearly, the one thing is very, very clear, at least in my mind, is that when it did start, it did shake up the industry. I
Yeah,
think a lot of people were coasting along, in leadership positions, not really sort of, worrying too much about innovation and doing new things. Because once you establish leadership position, complacency does set in, right? I think housing came and shook everybody up, right? Uh, I had the utmost respect for what they built in terms of the technology,
yeah,
the user interface, the way they went about branding themselves. I think it was a fabulous story.
Yeah.
And it was I think everybody's envy. It
Hmm.
was seen as the poster child, for the startup world,
Hmm.
for the longest. But look, things do go wrong, right? I mean,
Hmm.
all of us who've been in the startup world realize that we've had our issues along the way, and sometimes those issues get tackled, sometimes they don't, right? So I think what happened at housing was that things sort of bubbled over, right? And I think a great company with a great asset, I think sort of hit a wall. And we had this opportunity of sort of going into it and seeing as to what we could do. See, my fundamental belief, as a person in the business, in the trenches, and having seen what their product is, hearing from people what they thought of the company, I was like, look, this is a great asset.
Yeah.
To be honest, many of our investors said that, Dhruv, I think you're stepping into a sinking ship and you'll probably sink along with it. But that was just popular perception because things really, really had gone awry as far as the media was concerned, the way it was projected. I don't know. When we went in, we realized things were not as bad as maybe they had been portrayed. To be honest, right?
Hmm.
But people form popular perceptions, as you said, and people were worried. But I had the conviction that, look, I think it's a great asset, and I think it was very complementary to what we were doing and fit in extremely well with our long-term strategy. And we went ahead and did that. Um, and to a pleasant surprise, it was a great asset on which we could sort of which we could use as a foundation to build upon. So we kept the sort of the design ethos in place, only improved it. Built on the tech capabilities. Built on the brand and all of those things to take the business to the next level. I think it was one asset where it was under monetized, and we sort of set about figuring out how to monetize that. And I'm happy to say that today it's the biggest piece of a business. 3 years hence, so we've been very, very happy with that. It took a lot of work, frankly. M&A, as you know,
Yeah.
I think data shows globally that more than 50%, or maybe a larger percentage of
Yeah.
M&A fail, right?
Yeah.
And a lot of the reasons for that sometimes tends to be, I think, when you do M&A for the wrong reason, right? Sometimes you do it out of hubris, as opposed to really understanding if there is real value to be added. Is there a real synergy or not? In our case, I think, if you want to be a part of the ecosystem of real estate, you really need a large demand aggregation engine. Without that, you really, really can't scale the business.
Yeah.
And housing was that demand aggregation engine, for us. There was a good reason to buy it. Plus, I think why acquisitions fail is you really don't have a plan, right? It's like you wake up the next morning and like, okay, now what do I do, right? That's not how you do it, right? You kind of clearly understand what the rationale is and have a detailed, merger integration plan built well before you actually, start executing. I worked
Hmm.
with GE in M&A, and one thing I realized at that point in time, that a merger integration process started actually during your due diligence and the transaction period. So actually, when you hit the ground, day zero, you had a complete plan in place. You knew what to do, and you
Yeah.
kind of implemented all of that in the first 30, 60, and 90 days. So I think it
Hmm.
was a lot of planning, a good reason for the merger, as well as the asset that we bought. I think
Hmm.
which is fit in, where we are today.
Hmm. But the good thing is that uh, the the interesting thing is that you went ahead, and because at that time housing was so written off, right? So you saw something which many people quickly had, first it was such a celebratory uh, product startup, and suddenly deep dive, nose dived into nothing. Yeah.
But
Yeah. Yeah.
Shraddha, one thing I do want to share that we weren't the only suitors. There were many people out there uh,
Hmm.
who were looking at the asset, uh,
Hmm.
and I think just how we approached the acquisition, as well as what we sort of had to offer.
Huh.
Company, I think, really helped us win that sort of exercise, or the exercise of actually dating and then obviously getting married. Otherwise, so I wouldn't say it was all that beaten down and that it was a pariah which no one wanted. I think it was still a very coveted asset, even at that.
Yeah. 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 But yeah, good that you told us, and good that we know, because suddenly it looked like big and then nothing. Yeah, yeah, good that you clarified. Dhruv, I want to understand from you. You started, you're one of the co-founders of PropTiger, and through your lens, I want to understand, because you've had such an illustrious career before this. You have such a good pedigree, education, then you worked in very big, large organizations. What got you to start PropTiger? Because you would have done your analysis, study before jumping into this. What got you so excited about the space?
So, it's a great question, Shraddha, because, at the end of the day, when you sort of ideate about a business, on a piece of paper, on a whiteboard, sometimes, you miss many things. In my case, it was sort of driven by being on the ground and understanding the fundamental need, of an Indian family. So,
Hmm.
PropTiger, we ran a fintech startup called I Trust Financial Advisors. So it was a company which essentially did financial planning for Indian families. The same
Hmm.
way we did a business plan for a business. We helped create a business plan for a family in
Hmm.
terms of, look, what your current assets were, what your income was, what your income potential was, what your long-term financial goals were. Around that, we would create a financial plan to help you get to those goals. And in the process of that, whatever assets you needed to buy, whatever insurances you needed to buy, we would help you do that. So it was like a
Hmm.
holistic fintech platform. And during that process, we learned that the biggest need for an Indian family, as they perceived it, was the fact that, look, they wanted to buy their own home. And what they were saving for was essentially saving for being able to garner that down payment, which they had to make towards getting a mortgage and then buying a house.
Hmm.
So after doing, like, tens of thousands of financial plans for customers, we realized that that was their biggest need. During that process, we also realized that at that point in time, now things have changed. Many products were like a push. Insurance was a push.
Yeah.
People never realized, look, none of us sitting here, imagine that, we could essentially, get hit by a bus tomorrow morning, or some, out of the blue event happens to us, right?
Yeah.
No one wants to believe that, right? But that's the precise reason you buy insurance. But
Hmm.
nobody was doing that, right?
Hmm.
um, People were reluctant to put money into any other asset class, other than sort of, real estate and gold, right?
Yeah.
So what we kind of realized during that process was that that real estate was something which was a hugely emotional requirement, something everybody wanted to do, and it was going to be a much easier job for us to build a business around that than to try and, sell financial products to people. Of course, people have made hugely successful businesses in the field of selling insurance, mutual funds, everything else. But at that point in time, there were lots and lots of regulatory headwinds for our business, which is why we actually sold our fintech business to Carvey, and then really carved out the real estate piece, and started PropTiger.
Wow. When you were saying this, Dhruv, I was remembering that जो essentials क्या है? Education हो जाए, degree हो जाए, शादी हो जाए और एक घर हो जाए.
Right. No,
Those are,
absolutely. And
yeah,
in those financial plans, to be honest, Shraddha, we saw that people were saving, for a home, to send probably their kids abroad,
yeah.
enough to get them, married, maybe plan like a foreign vacation every 2 years, very basic stuff. I mean, that's what, families, across India want, right? And we were kind of really targeting, the broad Indian middle class, and that gave us a huge insight into how they thought and what they wanted. So when
Yeah.
we started PropTiger, it was on the back of, I would say, 4 years of research, really, at iTrust, which was the name of our previous venture, which sort of prompted us to start, PropTiger.
Interesting. Yeah. Yeah, but do you see, Dhruv, again, you'll be best positioned to answer this. We've been hearing all these conversations that, oh, the millennials today don't want to own houses. There's this whole shared economy culture which is rising, which is very different from, earlier generations and era. Do you see that change happening? Mindset shift?
So clearly, Shraddha, we were seeing that mindset shift happening, where people were like saying, okay, you know what, we believe in experiences. Uh,
Huh,
we don't believe in owning assets, right?
huh,
If you can get a very comfortable, ride on even on a private jet, which you can rent out, Why need to buy it, right?
Yeah.
If you can go, on 5 foreign vacations, why would you want to buy like a vacation home in one particular place, right? Why would you want to tie yourself down with a house when you know that, in today's dynamic world, your job, your passion, your hobby, whatever it is, could take you anywhere. You don't even need to be in a job. You could, sort of be a freelancer and not be tied down. And then of course we were used to the gig economy and sharing economy with many, many other things like auto and everything else. So why not a home, right? And which is why we kind of saw the advent of co-living players, kind of gave that flexibility, right? Today you can be in a, perfectly well-managed world-class home in Delhi, and tomorrow you decide to pack up your bags, you can go
Yeah.
to the Bangalore center for this particular co-living, provider. So
Yeah.
that's clearly a shift which we saw, and I think it will continue to happen. I think what could be a big change in that sort of thought process which was happening is COVID, frankly.
Yeah.
Uh, and we shouldn't underestimate that, just
Yeah.
because we're in the thick of it. People might say, "Oh, Dhruv, you're sort of overestimating the impact of COVID because we're right now in the throes of the disease, right? With very little sort of, I would say, view in terms of how quickly we can get out of this situation, right? So naturally, you tend to think the worst. But I fundamentally believe that our relationship to the home, as I mentioned to you earlier, has changed. It's been our one and only safe haven, and continues to be,
Yeah.
in a moment of crisis. So I think people's views with regard to owning a home, I think, will get changed fundamentally. That one pull which we were seeing towards the shared economy experiences and not owning, I think there's going to be a strong pull now coming from what we've experienced, with COVID. So you will have both these sort of things, in tension. So I will not dismiss, home buying as something which is going to be passé, and neither will I say that, look, this whole sharing co-living thing is going to go away either. So there's going to be a healthy
Yeah.
tension. But clearly one trend which was actually worrying, if one looked at it, 10 years hence, I think that I get less worried now, just given what's happened with COVID.
Now that you're saying this, see, I've been speaking to a lot of people, and they're saying the same thing. In fact, some were saying, and now again, you are best placed to answer that the housing, uh, the the payments, or the money, what do you call it, the money that you have to pay for good houses is going to increase, because now what the signal people are getting is that everyone wants to move to a better neighborhood. So if today I could afford a house of 1 crore, I'm ready to stretch it to 1.5 or 2, because I want to move to a better neighborhood, and that is becoming a sort of reality. uh,
Yeah, so so more than a better neighborhood, Shraddha, because that could still be quite unaffordable, just given
mm,
that certain neighborhoods carry certain price tags, with them. I think what you're going to find is you're going to find more sort of township community type of project,
mm,
where it's sort of all self sustaining, right? Or self dependent. You might see these communities where you have like a barber shop. You of course, gyms are already par for the course, but you'll see like a small mini mall kind of thing. Whatever you need to kind of be self sufficient if something like a COVID were to happen, right? Without sort of the need to venture out in what would be seen as a risky world. I think though the demand for those kind of communities would go up, and just given the fact that land is not available in the heart of the cities to do that, you'll find it in the peripheries of the city. And that's where I think the whole concept of walk to work will shift from work from home. So
yeah.
people will be perfectly comfortable staying in these places because they could just work from home. And even if they had to come into work once a week or twice a week, they'd be happy to make that commute, because at least for the rest of the 5 days, you were in a sort of self-sufficient, well-ensconced community outside. So
Yeah, yeah, very, very relevant point.
yeah, because people in New York today are looking to move to the suburbs, right? Because it's congested. It's because of congestion. I think the COVID, cases have been, more severe than before. So
Yeah,
people are looking to move to the suburbs. So I think we'll see a similar dynamic in Mumbai as well as Delhi, and maybe even
yeah.
Bangalore.
In fact, now that you're saying, I read that no, there was this that people are not willing to come back to New York and they're happy in the suburbs that they've
Right.
gone. Yeah,
Right.
yeah, yeah. Not just housing.com, but I hear that you've made a couple of strategic investments. I want to understand your mind, because in India, we don't see companies make strategic investments. Did you do it because you found value, or did you think differently, or were you open to, because everything we want to build rather than buy. But you've gone ahead and been a visionary and been very new age, if I may say so, in figuring out interesting assets to get inside
Yeah.
PropTiger.
So look, Shraddha, it's a debate which rages in every boardroom, right? Be it of a startup or a large company. I think the build versus buy decision, is an age-old decision and an
Hmm.
age-old dilemma which corporate boards, management always faces. I think for startups it becomes even more critical because time to market and speed to market is crucial.
Yes.
Sometimes trying to do everything yourself and build everything yourself, right, just takes longer. And even trying to build those capabilities might on the surface seem easy, but it's not. It's
Yeah.
not easy for me to just start another business. If I want to start doing co-living today and run a platform, it's not easy for me to do because
Yeah.
it's fundamentally, in my opinion, a hospitality business. How do you kind of ensure comfort, for hundreds of people staying, in an apartment you're managing, right?
But
So
Dhruv, let me recognize you here before you continue, that this acknowledgement as an entrepreneur, that everything is not easy for me to do everything. I think many of us don't recognize that. And that's what I'm saying, that you go ahead and recognize that. Yeah, yeah, yeah.
yeah, so it's important, Shraddha, because if you don't understand your own limitations, right, I think that can be very detrimental because you may end up doing stuff which actually ends up hurting you. So we've been very proactive where we found that, look, this is something which is good, adds value to our company, it'll take us long to build. We've been happy to go out and buy that asset.
Hmm.
And of course we've been and look, we've done many acquisitions. One or two have done really well for us, one or two have done okay for us, and maybe one might not have done as well for us, but that's par for the course. Again, I think for
Yeah.
us the biggest purchase we made was housing.com, and that, knock on wood, has done well for us. So I can say now, in retrospect, that look, M&A worked really well for us. But look, going in, we had the same concerns, the same sort of worries, that how do we make cultures mesh together? Because
Hmm.
the biggest risk of doing acquisitions is bringing in multiple cultures, and trying to put all of those together is a challenging part. I think that's where we've been, our focus on people, and focus on culture and focus on values has helped, because that's what we've tried to sort of do whenever we've done a new acquisition, is to come back to the drawing board together and say, hey, look, you know what, if now you're founders from a different company, we are here in PropTiger, can we sit down together and re-evolve a common vision,
Hmm.
re-evolve a common set of values, so that people everywhere feel comfortable, don't feel threatened, and kind of gel together very quickly as a team and move forward? Because if that doesn't happen, you can buy the best asset, and
Yeah.
it won't work for you.
Yeah, 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 yeah. And congratulations for making it work. I think these are some of the stories that we need to tell more. One is yeah, about this, and the second thing is that I'm very impressed when I read that you have made strategic investments, because somehow we need to have more of it. I'm just saying purely from the startup ecosystem perspective also. Yeah. Uh, Dhruv, if we can peep inside your boardroom, what's the big plan that you guys discuss when it comes to your company?
Look, one of the things we do realize, Shraddha, is, and we've seen this happen globally, that at the end of the day, uh, there is, I wouldn't say a winner take all
Hmm.
syndrome, uh, but we've seen it with Right Move in the UK, right? They get a disproportionate share of the traffic, whoever's
Hmm.
looking to do anything with real estate, right? If you look at one of our investors, Real Estate Australia, right, they get a disproportionate share of traffic for people looking to do something in real estate. We see it with, in Singapore with, let's say, Property Guru, who gets a
Hmm.
disproportionate share of traffic. We look at it with the US, there's Zillow out there, right? And one of our, again, News Corp's assets called Realtor.com. So it is a very, at the end of the day, a very concentrated sector, when we look at audience, right?
Hmm.
So I think the thing which we discuss the most, frankly, is how do we get to a distant number one position as far as audience growth is concerned. Because if you have audience, that means you have consumers coming in, then you're going to win the sector. Otherwise, it's going to be a big challenge. So for us, that's sort of our fundamental goal, as we say: build traffic, build audience, and we believe that we have the right product in place, the right service offering in place to also be able to attract that audience. Because if you attract the audience and you don't have the right product,
Yeah.
the audience goes away very fast. So that's sort of what keeps us up at night. That how do we build that scale and how do we build that audience?
You're not going to give me the exact number, but that distant number one position. कितने लोग होते हैं वहाँ पे? कितने audience? क्या audience है?
I would say until you don't have 60-70% market share of audience, you're not a distant number one. Right? That's what it is. And we are far from that today. And I think anyone in this country today is far from that. And which is what makes PropTech very exciting, because there is the opportunity, right?
Yeah.
For not just us, but other players as well to get to that position. So it's going to be an interesting dynamic, competitive dynamic over the next few years, where somebody is going to emerge, as that winner. We believe that it's going to be us. But I'm sure there are enough people out there who believe the same, and rightfully so, because I think there is an open playing field right now for people to go out and get to that position. And I think given the fact that we've had headwinds in the underlying industry so far has been a challenge, but now I think those headwinds will become tailwinds. Now, whether that happens in the next 12 months or 18 months, I don't know. But with that, I think that opportunity is abundantly open for folks like us out there.
Yeah, and I see you are very excited and geared up to get to that place. So, Dhruv, this is Money Matters. I want to ask you, what does money mean to you personally?
It's an interesting.
First, tell me, were you born to money?
Sorry?
Were you born to money? Were you the rich guy?
Look, being rich is all sort of relative, but all I can say is I had a very comfortable upbringing. So unfortunately, I don't have stories to tell about, where, I didn't have sufficient money to do what I wanted. Being honest here. I think for me, although it's been very interesting how I've viewed money, and I think I've learned it from, I would say, my father to a large extent, is I see that money is an enabler at the end of the day, right? It's up to a certain extent, it enables you to meet your needs and requirements, right? We all of us, want to have a nice home, want to do, as you said, right? Give our kids a good education, be able to, enjoy, certain experiences in life. So I think I see money as allowing us or enabling us to do that. And I think beyond that, what I see money is, again, as an enabler, but an enabler to make a positive impact in this world. See, beyond a certain point, I think it becomes a number, right?
Yeah.
And if we just simply chase a number, I think it can get pretty toxic, the relationship with money, right? And it leads us to do all sorts of funny things. I don't have to say that, we all know that.
Yeah.
But if you see that as an enabler to make a positive impact in life, right? And we've seen it with many very wealthy people who basically given away their money, use their money to make a positive impact in the world, to change the world.
Yeah.
That's the real power of money, I think. You need a very small amount to meet your essentials. And beyond that, I think it's a great tool which one can have to make a positive difference. That's how I see it.
Wow. Yeah. And I hope you have plenty of it so that you can make positive difference and go to that distant number one position. Yeah. Sorry, I forgot to ask. Are you angel investing in startups? Are you supporting startups in some way in the country?
Yes. So I am a pretty active angel investor. Plus, I do take, time whenever, I can spare some to talk to new entrepreneurs in terms of, as they say, I've seen the movie play out a few times now. And I know exactly at what point, kya hone wala, as they say. So I'm able to share that experience with people where, they hit a wall and being in the trenches, they just can't see a way out. But really, if you've been there, done that before, I think a simple conversation can sometimes make a big difference,
Yeah.
for new entrepreneurs. So I try my best to, support startups, both, mentoring them as well as investing, wherever I can, wherever I think that, yes, there is an opportunity, which can become big. And many a time, one thing I always do is, I like to do is, if anyone leaves our company and wants to do a startup, I 9 out of 10 times try and invest, uh,
Wow.
because I believe that that's sort of one goal of a startup is not just doing what you're doing, but also to build the ecosystem. And if people from your company can actually go out and spawn more startups, nothing like it.
Thank you.
I hope so. Thank
Thanks.
you very much. Thanks for having me on the show.